Okay, so let's try to solve our problem or use the method FIFO for this one. So we have to identify several things, that is ending inventory, cost of goods sold, and gross profit. Yeah, so what we have here, and we can use this table to sort of do these calculations. And it doesn't necessarily, if you already have your own method of doing it, please continue doing that. But if you find this one more useful, you can also switch to this one. Now, what we have here is an Excel table that helps me to calculate all of the total costs in general using the formula provided by Excel. Yeah, so we have the date January 1st. Yeah, so beginning inventory in our case is 50. And therefore, on the beginning, we have the remaining inventory. We didn't purchase it. It was our remaining inventory of number of units 50. Unit cost is 7. And that gives us, so 50 multiplied by 7 gives us $350 of total inventory remaining on our balances. So that's the very first one. Yeah, I can underline it, I can leave it like this, and then add purchases. So January 10, I made a purchase, or this company made a purchase of 100 units, each costing $10, which gives us total cost of 1,000. Total cost of goods sold, we didn't sell anything, therefore that is what it is. Now the remaining inventory at this point is exactly the same thing, so we basically shift it down and add this new inventory. Yeah, so I can either copy it or leave it like this, so I can just underline it so it doesn't confuse you that much. Yeah, so this is the remaining for the January 1, and once we made a purchase, we have both this one. It doesn't mean that I'm adding it to this one. It means that I'm just saying that remaining inventory by this point, we have 150 units of toys, and we have these costs per each lot, and these are the total costs by the end of this period. So again, I can underline it like this. It's going to be like this, and then we have sold on January 15. January 15, we sold, cost of goods sold, 70 units of our toys, right? And again, we are using the FIFO method, so let me just type it in, FIFO method. This is for sure is what we're doing right now. Now, the FIFO method says that you have to assume that you're selling the first that you bought, and you sold it also first. So the cost of goods sold, we sold exactly 70 units. The 50 of those we're going to take from the first lot, which is here, and the cost of it is $7. And the remaining 20, I'm sorry, you're going to use from the second lot, which is here, and that is $10 each. And now I can also use the formula, so it's sort of minus, yeah, we sold this one, so there's nothing left, yeah. So even if I multiply it by 7, there is 0. And then also from the 100th one, we sold 20, which leaves us with $80, and the value or the cost of goods of this lot was $10. Yeah, so we have remaining 800 after we sold it. We have remaining 800, and we sold here of total 550. Again, I'm going to underline it because at this point, by the January 15th, we have sort of sold, yeah, cost of goods sold 550, and remaining in our stock is $800 worth of inventory. Now again, continuing, we're doing January 17th. We sold, we purchased, $150, 150 units, each $11. That they cost $11, and by the January 17th, I have still this 80. I didn't go anywhere. I didn't sell it. It's still with me, and I've added these 150 units here. Yeah. So let me just. I don't like it when it happens, but what can we do? Yeah. So the remaining by this point is this much. Yeah. In total, we have 2,450 dollars of inventory, or 230 units of inventory we have. And on January 18, I purchased another one right here. You can see it. I don't know actually if you can see the mouse. So if you don't, I'm really sorry. We have 15. January 18, I'm sorry. Yeah, we did all of those. Now we're doing the January 18. And that one, we purchased 230 units for $13 each, the value of which comes to 2,990. And again, our inventories from the previous period or from the previous day are still there, what happened? Where did this come from? Oh, okay, so this one used the formula. I should have fixed this. So let me just do this. No, this one, but fixed. Okay. Yep, so this one is also supposed to be fixed. Let me just fix it. And once I copy it, it should stay as it is. Okay, so it's right there. We have exactly from the previous day we had these, and then I'm adding this one to our remaining ones. And here it is. We have our, let me remove this and add another underline here to show you that this is the remaining for this period, for this day specifically. Yeah, and finally on the last transaction we have the sale transaction, and here we can immediately calculate our cost of goods sold. And as you can see, we sold 190 units. Yeah, so in total we sold 190 units. Now again, we're using FIFO method, which implies that we're getting rid of the oldest inventory, which in this case is 80 first. So let me just keep this one on the side. This is 190 here, but let me just write it separately. So we sold 80, costing $10. Yeah. So the remaining, if I have to copy it here, so this one is no more. Yeah. So this one is gone. Even if I multiply it by 10, it's gone. Now we have from 190 minus 80, we have left 110. The 110 I can take from this 150, which is $11 worth. So again, I can do this calculation where I deduct this one. So remaining from this line is 40 units, each costing 11, and 230 remains untouched from the final lot, and this is my ending balance. I can also add here total. So here I'm gonna have, I can easily calculate using my formula or using the longhand. So this is gonna give me the total goods available for sale actually plus this one. Yeah, so beginning inventory is also that. No, actually let's do it here. This is much better. So here is my total balance of what is left. The ending in the inventory is this 40 plus 230. Yeah, 230. Yeah, so this is my remaining inventory and its value, and this is my total cost of goods sold, which is basically these two. Yeah, plus the bottom two. This is it. This is how you calculate it. Now that we know the total cost of goods sold, yeah, that this is the total cost of goods sold, I know my sales value, and sales is simple. Like I told you before, it's basically 70 multiplied by 15 and plus 190 multiplied by 17. Yeah, so this is right from here. Yeah, so we don't need to guess, we don't need to second guess it. This is exactly the sales. When it comes to the cost of goods sold, we already made our calculations. It's 2,560, and so our gross profit is going to be easily calculated by doing this formula. That's it. So this is how we find our cost of goods sold and our ending inventory using this method FIFO. And next we're going to look using again the same type of a table. We're going to look at how we do it on the LIFO method.